there everyone, my name is Jessica Rampitzrider and I have decided to do my case study on the Walt Disney Company. Their ticker symbol is DIS. The reason why I chose this company in particular is because ever since I was a child, Disney has touched my heart in so many ways and given me so many memorable experiences, and I just wanted to do a little bit more research into the company and see how they are doing financially and whether or not they would be worth investing my money in. So we're going to just take a look at some financials today and go through the history of the company and then determine whether or not this company would actually be a decent investment. So the company actually began back in the early 1920s. Walt Disney and his brother Roy had signed a contract to produce Alice comedy series, and from there the company just took off. They had their first animated film, which starred Mickey. The short was called Steamboat Willie, and that was 1928. In 1940, Disney issued its very first stock. And then, of course, the park started to open. 1955, Disneyland opened, their first ever theme park. 1971, Disney World opened. And then in 1983, they decided to expand internationally, and they opened up a resort in Tokyo, which was really neat. And then from there, it started with animated shorts, then it went over theme parks, resorts, and then they began acquiring different companies. So they purchased Pixar in 2006. They recently just acquired Lucasfilm and Marvel as well. So they've been doing extremely well as far as the industry goes. They've expanded quite a bit since day one when they first introduced Mickey. And I just wanted to share a quick quote. It's by Walt Disney. He says, "I only hope that we never lose sight of one thing, that it was all started by a mouse." And indeed it was started by Mickey Mouse with that Steamboat Willie production. We're just going to take a quick look into some of the main company operations. Walt Disney Company currently operates in more than 40 countries and territories. It has expanded quite a bit since day one. It consists of 4 main business segments. So this is media networks, parks and resorts, studio entertainment, and then consumer products. So media networks, those are ABC, which is now turned into Freeform for the ABC Family Network. They have ESPN, and they have Disney Channel as well for that. And then as far as the parks and resorts, they started with Disneyland, then they went to Disney World. They've expanded into several parks throughout the Asia Pacific region, Japan, Europe. I know they're recently adding an expansion on to Disneyland in Paris. Their studio entertainment section, which consists of all the animations, and Marvel Productions as well. They just acquired Marvel Studio and Lucasfilm. And then consumer products just consist of all their toys and clothing products. So they have multiple segments around the world. It's very hard not to run into something that's Disney. So it's just kind of neat. This is everything that they are currently operating under. Now we're just going to take a look into some of the company's main management team members. So the team is managed by Robert A. Iger. He is currently the Chief Executive Officer of the company. And all of these lovely individuals, they are truly leaders. They have to manage the world's largest media company at the moment, and they are very committed to excellence, creativity, and innovation. So the company has expanded quite a bit, and it's very lucky to have such wonderful leaders paving the way for innovation and creativity among its employees. I did want to just briefly touch base on some of the organizational values within the Walt Disney Company. Walt Disney had actually brought up a thing for 4 circumstances. So 4 circumstances, these are some of the things that they emphasize within the company for all of the employees. One of the biggest things is innovation. So Walt Disney always encouraged everybody to not be afraid to take risks. If you can dream it, you can do it. That was his quote. And yeah, I mean, if employees have any ideas, they are very encouraged to share them, because you never know. It could lead to an upcoming attraction at a theme park, or something, a new entity of Disney entirely. And then the second circumstance is support. So all the organization's members, even the people in the higher up level, need to be cheerleaders of employee development. They need to encourage the employees. No one is ever too good to take on training. The third circumstance is education. So Disney does have an emphasis on consistent learning with an emphasis on creativity, and that's where the innovation key component also comes into play. And then last but not least, Walt Disney just always encouraged all of anyone he came across just to laugh, be engaging and memorable, don't be boring and forgettable. So these are just some of the organizational values that the company holds for its employees and what makes it a great place to work. Now we're going to start taking a peek at some of the company's financials. So I just wanted to pull a couple different companies that were competing companies in the same sector as Walt Disney Company. So starting with the parks and resort sector, just kind of comparing that market share, Disney holds very strong. Disney was actually the top ranking in that area. It actually beat out Universal Studios, the Comcast area, by quite a bit, actually. And I was actually surprised Carnival Corp was in there. Never heard of that one. You don't hear of that one too often. And then the next sector was consumer products. Disney and Mattel were very close. Mattel came ahead by a little bit extra, but Disney did beat out Hasbro, which is pretty big. And then as far as the cable network sector, Disney comes out on top again, even ahead of 21st Century Fox, which they are actually trying to acquire here really soon. The deal is still pending for that. And it beat out Comcast, which is big. That's one of their main competitors within the cable network area and the media network. So definitely something to look at there. Next, we're going to take a look at some of Disney's primary revenue sources. Just kind of taking a peek here as far as comparing last year's revenues to this year's revenues. They have definitely gone up quite a bit, or a little bit I should say overall. As far as the media network area goes, that comes out on top. That brings in the most revenue for the company by far, and then next you'd have the parks and resorts. Consumer products actually comes in last out of everything, which is relatively surprising, only because there are so many toys and clothing products out there. You'd think that one would be a little bit more, but I guess I can definitely see with the media networks now that they have acquired they've merged with quite a few different companies there. So they are pulling out ahead this year, which is great. Just kind of hoping to keep that momentum as the years go on. As far as the financial condition goes for the company, just kind of want to take a look at two of the bigger areas, net sales and net income. Just comparing it across the past 3 years, it has gone up quite a bit. It did dip, the net sales and net income did dip a little bit last year, but as of current, those have increased, which is great. Net sales are up there and net income, so we've got a little bit more money to invest and work with. Here we're going to just be taking a look at some of the company's key financial ratios, starting with earnings per share. That is sitting at $7.94. It's a pretty decent number. That means investors would probably be more willing to invest in this company because the Walt Disney is generating a decent amount of profit off of their outstanding shares of stock. The dividends per share, Disney is paying out 84 cents per share. They did start paying dividends twice per year after 2015. So that's something that investors are really enjoying right now. They were only paying annual dividends. Now it's semi-annual dividends. They're sitting at a free cash flow of $9,853,000. It's a positive cash flow, which is great. They've got enough of cash on hand in the event they need it for any emergency expenses that come up. Return on equity sitting at 27.13%. I'd say this is a pretty decent amount. The return on equity is just a measure of efficiency. So it has increased in recent years, which is good. This just kind of shows the company's increasing ability to generate a profit. So it's a relatively decent number for Disney right now, especially seeing as it has increased. Price per earnings ratio is 13.83. Current ratio is 0.88. This is just the ability to pay the bills. It is sitting a little bit low right now, so the current liabilities are exceeding, the current assets by a little bit. But I'm not going to worry too much about that. The company is choosing to finance quite a bit right now and working on some major projects, so I'm sure it'll be able to boost that number a little bit. Usually any number sitting under 1 is a little bit low. And if it's really, really low, then it's, the investors might wonder whether a company actually has enough money to pay off those short-term liabilities. Now, the debt-to-equity ratio is sitting at 0.38. This is pretty good. It is under 0.4. It's a little bit on the lower side, but that's okay. This is just kind of the proportion of debt used over the other forms of capital, and that's what the debt-to-equity ratio kind of displays here. But it's okay. Interest rates are low, and I think Disney isn't choosing to put themselves too much in debt or finance any more than they have to, just in the event those interest rates do increase. So they are sitting in a pretty good spot as far as that goes. This chart just gives a little bit of an insight into the company's stock performance over the past year. For the most part, the stock price has remained pretty consistent. The lows have been in the $96 zone, and the high has been like around 117 mark. So for the time, it has remained pretty consistent. In the summer months, in the winter months, it would be expected to go up. Generally, those are the times when people tend to go on vacation. So the parks and resorts would be receiving more money in that area, bringing in more revenue. Just wanted to include a little breakdown then of the stock performance as well, and we brought up some of these before. The price per earnings ratio, 13.83, yield percent, 1.53. Dividends, they are paying out 84 cents per share. They've currently got 1.49 billion shares outstanding. And like we were talking about before with the range over the year span, the low was about 696 and the high was about 117. So it's doing pretty well. It's not fluctuating too much within the day range, not really within much of $1. So that is pretty decent for there. So overall, I would say they're doing pretty well as far as their stock performance. Looking ahead, Disney definitely has some future goals that they're looking forward to accomplishing. Currently, all of their employees have contributed a total of about 3 million hours of employee community service hours, and they want to boost this up to 5 million hours of community service by the year 2020. They have a lot of different outreach programs that they send their employees to, and around the world too, they do outreach with people for as far as volunteer service. Then they want to launch direct-to-consumer streaming device in late 2019. This will kind of be like a little Netflix, so everyone will be able to get on-demand, animation shorts, Disney films, everything, every possible Disney movie out there. And then they are hoping to officially gain the rights to 21st Century Fox. The offer is still pending, but it is looking pretty promising that they will acquire that soon as well. And then they plan to launch several new attractions throughout the world. So they've got Star Wars Galaxy Edge and a Star Wars themed hotel, a Ratatouille ride that's going to be in Disneyland Paris, and then they're planning on remodeling Epcot. So wrapping everything up here, would I invest in this company? Absolutely. For one, profit has definitely increased over recent years. I think with the new expansions that will be expected to increase as well, that'll draw in plenty of new customers. They are currently the main leader in the mass media entertainment industry, and they are acquiring all of the other companies out there, including some of their prior competitors. They have a continuous innovation. Obviously, they're looking to add new attractions to all of their theme parks. They're expanding into the on-demand service sector, so that's phenomenal. Their stock price has remained relatively high and steady, so there doesn't seem to pose much of a risk there. I think I'd be willing to invest in the stock market with that. And then, of course, they're always expanding, and they have lots of plans for global expansion, which is great. I think that the more countries that you're able to expand your company with, the more wonderful ideas that are added to the company, and it's just going to make your company more successful overall. So I think that this looks very promising, and I can't wait to see what Disney has in store next.